If I gave you $1 million today to buy property in Dubai, there's a real good chance you'd buy in the wrong area. And 2 or 3 years from now, you'd be sitting on an asset that's doing nothing, while investors who bought down the road are sitting on a 25% equity gains. I manage portfolios for investors deploying 6- and 7-figure investments into Dubai. And I've watched this pattern play out dozens of times. Experienced investors who've done their diligence, and they still end up locking their capital into an area that's completely mismatched to their goal. So to prevent that happening to you, I'm going to rank every Dubai area from best to worst based on the current market and show you what you need to know before you place a deposit on anything. So now that we've cleared that, let's start with the danger list, because if you get this wrong, nothing else in this video matters. What most people get wrong: they hear that an area is popular and assume it must be a good investment. Or they see a decent rental yield today and assume that will hold long term. Saturation zones are areas where thousands of similar units are being delivered at the same time, mostly studios and standard one-bed apartments with very little differentiation. You see this clearly in places like Jumeirah Village Circle and parts of Business Bay. These areas aren't bad places to live. They're busy, central, and well known. The problem is the supply. When you own a standard one bed in JVC or an older tower in Business Bay, you're competing against dozens, sometimes hundreds, of nearly identical listings in the same postcode. That creates 2 problems. First, tenants have all the power. If you don't drop your rent, they'll just move next door. Second, your exit becomes weak. In slower markets, generic units in high supply areas are always the first to discount and the last to sell. That's why you'll often see yields that look acceptable on paper, around 6 to 7%, but capital growth that goes sideways once supply peaks. This is also why I don't call them bad areas. They can be great places to live. They're just hard places to invest if you're buying something average. If you're buying in a high-density area, never buy something average. If you can't explain why a tenant would pick your unit over 10 others nearby, you're already in trouble. Now, I spend a lot of time analysing supply pipelines, delivery schedules, and where the investors are likely to lose pricing power. So we have turned that into a Dubai investor due diligence checklist, the same checklist we use before any client commits capital. If you're investing from overseas and want to avoid saturation traps, download it below and use it alongside this video. Now that we've covered where investors get trapped, let's move to the upside, because it's the whole point of this video. There's no best areas in Dubai. There is only the best area for your goal. So I'm going to rank the best places to buy in 2026 in 3 buckets: income, capital appreciation, and wealth preservation. The best area for income. If your priority is monthly income, you want areas that function as yield engines. And what most people get wrong: they buy for yield but still expect capital growth, like in a premium district. That usually means overpaying. Areas like Alpha Jan, Discovery Gardens, Walsan, and parts of DLRC work well for income because entry prices are lower and rental demand is practical and consistent. People rent here because it's affordable and functional, not because it's glamorous. That's why yields can sit in the 7 to 8% range when the deal is structured properly. But if you're buying for income, think like an operator. Focus on service charges, vacancy risk, tenant profile, and ease of management. Your win here isn't explosive growth, it's predictable cash flow. If income isn't your priority and you're aiming to grow equity, this next bucket is where that happens, but it requires patience. The best areas for capital appreciation. This category is for investors chasing capital growth. And what most people get wrong: they want growth returns but only feel comfortable buying in fully developed areas. Areas like Dubai South, Jumeirah Garden City, and Dubai Creek Harbour are driven by confirmed infrastructure and connectivity. Dubai South benefits from the expansion of Al Maktoum Airport, Jumeirah Garden City for its proximity to the beach and to the DIFC, whilst Creek Harbour still has room to mature as infrastructure and access improve. These are areas where value is created because infrastructure arrives before supply fully catches up. Only buying growth areas if you're comfortable holding through the construction and the noise. Verify the catalysts, verify the timeline. If the infrastructure isn't real and funded, it's not growth, it's speculation. Now, not everybody wants volatility or uncertainty. Some investors care most about protecting large amounts of capital over the long term. The best areas for wealth preservation. This is where capital goes for stability. What most people get wrong, they buy in premium areas expecting aggressive returns, then feel disappointed. Areas like Palm Jumeirah, downtown Dubai, and Dubai Hills Estate are established, scarcity-driven, and consistently in demand. These areas behave like prime districts in global cities. They attract high-quality tenants and buyers across cycles. The trade-off is yield. Net returns are usually lower, often around 4 to 5%, because entry prices and service charges are higher. Buy blue chip property when your priority is capital preservation, liquidity, and long-term demand. Don't buy it expecting growth zone returns. That's not its job. Now, understanding this framework is one thing. Deploying 7 figures into the right properties, especially if you're abroad, is another. That's what we do on our strategy calls. Align your goal, your risk profile, and your timeline. Then build a clear acquisition plan around it. If you want clarity instead of guesswork, book a call using the link below. Now, if you found the perfect area and the perfect bucket, none of that matters if you don't know how to structure your portfolio to hit a specific income target. Because buying 3 properties randomly won't get you financial freedom. But buying the right 3 properties structured the right way absolutely can. So watch this video next.